Hey everyone, it's Mike Andes, and you're listening to the Business Bootcamp Podcast. Today, I'm going to be sharing with you exactly which stocks I'm choosing right now as we have this week gone into a massive market correction, or somewhat of a pullback, I should say. And I want to share exactly what stocks I'm picking, what direction I'm investing right now. And I'm doing this because so many of you have asked me over the past few days as the market has had a massive downfall. And so I'm going to go ahead and share everything that I'm doing. This is by no means financial advice. You should absolutely be looking at these companies yourself, getting advice yourself, etc. But so many of you have been asking, so I wanted to go ahead and share my opinions and my thoughts here. Before we get into today's show, though, a big thank you to today's sponsor, which is Gusto. If you haven't already, go to gusto.com/bootcamp. You can try their software completely free, run your employees through their software, and get their paychecks directly into their bank accounts via direct deposit. Great reporting features, and I've seen some really, really cool things that they're creating for your employees to be able to take money out sooner than the end of the paycheck without having to ask you for a pay advance, things like that. So check it out today. Go to gusto.com/bootcamp. All right, so the past few days, we've had a massive drawback in the stock market. I know if you are invested in the stock market, you know what I'm talking about because it has been painful. It has been a bloodbath in the stock market if you are invested heavily in growth stocks. So we've talked about growth versus value stocks in previous videos, but in the day, when it comes to growth stocks, a lot of these stocks are smaller cap. And when I'm talking about growth stocks, and they're getting valued based upon how fast they're growing, not necessarily their price to earnings ratio and that they're super profitable and there's a multiple on that to find a valuation. That's not kind of stock we're talking about. That's those type of stocks like Chevron, BP, these big companies been around for a long time, Walmart. You can look at their earnings and then just multiply that by their PE ratio and come up with a relative valuation based upon the value of the company. Now, it's a lot harder to come up with a valuation with a company that has no profit, is growing extremely fast, like 500% a year, and is burning money. Like literally, they're losing money. And so over the past 12 months, as the government has pumped in money into the system via stimulus, junk bonds, buying those up literally like hundreds of billions every single month. No, as that's been happening, these small cap is small, companies that have small cap rates or cap sizes, they don't have hundreds of billions. There may be $2, $3, $4, $5 billion, the size and the valuation that is put on the company. Now, these stocks in the past year have done tremendously. Small cap and growth stocks. And these have led to the increase of things like Tesla that has 10 or 12x over the past 12 months. And we've seen these little companies that were $2 and $3 billion. Now they're worth 30, 40, 50 billion, or literally overnight they went from 10 billion to 100 billion because they literally talked about electric vehicles in their quarterly reports. And so we have seen in the past few days a massive correction. We're talking in the sum of 10 to 20% decline in a lot of these growth stocks. And so I'm going to share what I'm doing right now. And, there's a much better places than to listen to me when it comes to stocks. Meet Kevin is a great place to get started. Tom Nash, great place to get started. Jim Cramer talks every day on CNBC, Mad Money. Good to listen to that. I don't really subscribe to one person, like only get stocks that they use. I kind of get a whole bunch of different opinions, and I kind of come up with a blended thesis that I am really, which stocks I'm going to invest in. And so those are some of the ones I listen to. A lot of you have been asking that, but here's what I'm doing right now. So fortunately, a couple weeks ago, I took about 30% of what I was in the market, I took off the table. And I paid off all of my margin and had cash set aside and everything like that. Really just waiting for what's happening right now, and that is a pullback. And so I'm of the opinion that when I am investing into a stock market, it's got to be on discount. It's funny. When it comes to stock market, it's the one place where people panic when the prices come down. If the prices were going down at Walmart for a Black Friday sale, everyone would rush to buy whatever was going down in price. Whereas when it comes to stocks, people literally, when the price goes down, they start panicking and being afraid. When the price comes down, that is the time to buy. When the price is going up to the moon for the past 2 or 3 weeks and everything's been green in the market, that's when I get kind of afraid. That's when people are doing FOMO, fear of missing out. They're just buying in. They don't know what they're doing. and some dumb money in there. And so people are spending their stimulus check like, just throw it in the market, buy more Tesla. It only goes up. Like that type of investing scares me very much, and that's when I pull out. So a couple weeks ago, I was kind of feeling a little bit like the market was there, pulled 30% of my money out, paid off all my margin, had cash set aside, and then over the past week, I've been trickling money back in. Now, this morning, we woke up to a crazy market. This is Tuesday morning that I'm talking about here, February 23rd, and literally, it's very difficult to wake up in the morning and literally see in the first 10 minutes of trading, you lose like $50,000. Now, everything inside of you at that moment wants to be like, oh my goodness, get out of it, sell, it's all going to zero. But as long as you're not spending money that you can afford to lose, that's the time you actually need to be buying. When things are going up, like 10% up a day, like, oh, let's go, like every single day, 5 days in a row, that's when I start selling. That's when I'm like, this is getting a little bit too much, and I kind of get a little bit afraid. When there's sales in the market, that's when you want to buy, as long as you believe in two things. Number one, that the stock market long-term is going to do well, and number two, that the companies you're investing in are going to be profitable for the long term, and they have strong balance sheets. Now, if you're investing right now in companies that are blank checks, SPACs they're called, special acquisition companies, SPACs, if you're investing in those and they have no intention of being profitable for years in the future, I would be a little bit apprehensive right now to be buying into those. I wouldn't sell necessarily as long as you believe in the thesis of the company, but I would not be buying those right now. Over the past 3 weeks, I've been transitioning more away from growth stocks and into value stocks, or at least into companies, even if they are based upon growth, companies that I know will be around in 10, 15 years, companies that I believe in for the long term, companies that are profitable. Like that's actually like a really important thing right now, that I'm investing in companies that make money. Like they're profitable. On paper, they make money because there's so many stocks right now that are literally losing money and people are just pouring money in. It doesn't make a lot of sense when you actually break down the fundamentals of the stock. And yes, people can look at like low interest rates and all the rest of it, but the reason we've been having this massive drop in the past couple days is because the risk of inflation has been kind of going up. Because as treasury bond yields increase, it basically means the government's having to incentivize investors to buy their bonds, so they raise the interest rates on those yields, those bonds. And so traditionally that's precedes inflation. And so that's right now what we're kind of feeling, in my opinion. A lot of people kind of afraid of that happening because we have seen kind of an uptick in the bond yield curve. So what am I doing right now? I am simply buying stocks that I feel like for the long term are going to do very, very well. Those of you who have talked about Bitcoin, for example, like I'm not invested in Bitcoin. I sold out at $40,000. Shame on me. However, now it's at 50. It was at like 56,000, whatever. But I feel like it's just getting out of control. Same thing with Tesla. I sold out, shame on me, around 750. But guess what? This morning it went all the way down to like 715 after going up to like 900. And so, now am I buying in Tesla? Yeah, this morning I went ahead and bought some Tesla because it's dropped precipitously the past week. I think it's dropped like something around the lines of like 25 or 30% from its highs. So I'll buy a stock that drops that much, but I'm not going to buy a stock at its peak, at its height. Like when people buy stocks and it's been like 100% up in the past week, I freak out. Like that's crazy. Like why would you do that? You wait for a correction. You wait for a downturn. And so right now what I am doing is trying to invest more heavily in profitable blue chip, that's large cap stocks, companies that I believe in for the long term. And I'm trying to cut off anything that is losing money, that is super speculative, that I've maybe doubled or tripled my money in. Like for example, Lemonade, EXPI. There's other companies like, I'm just going to go through some like Twilio. I super believe in that company, even though it's been gone down a little bit. But like, I believe that's a long-term hold. Anything that's not long-term hold is what I start to doubt myself on, right? So like, for example, Lemonade, EXPI, I believe in these companies. I love these companies. I haven't sold anything, but they're definitely things that a few weeks ago I trimmed my positions in because they've doubled over the past several months. And so there's definitely going to be a this is a time to be a very disciplined investor, to know I'm going to buy when things are crashing, when everyone is going to be freaking out and the market's down 10, 15, 20%. That's a great time to buy. I'm not going to buy when everyone is euphoric. Everyone is saying that there's money all over the place. Everyone says it's going to go to the moon. Everyone is trying to get on the next GameStop, the next Tesla, the next Bitcoin. People are buying things out of emotion instead of the fundamentals of investing. That's when I get scared. That's when I'll start pushing the sell button. But right now, the last couple of days, I have been buying into the market. I've been buying companies like Walmart, Adobe, Oracle, Alibaba, Salesforce, Facebook. I'm big on Facebook right now. Last week I bought a whole bunch, and my two best companies the past couple weeks have been Oracle and Facebook. Oracle, Facebook, and a couple other larger ones, because they when a massive company like Amazon has a bad day, they drop like 2%. When a speculative SPAC play has a bad day, like CCIV, which is the Lucid Motors merger, like literally today it dropped 40%. Thank goodness I sold out at about $36, $37. It went way up, and I was like, oh man, I missed out. It was up to 65, and then it dropped literally today like 40 some odd percent. So those sort of speculative moves, they're much more volatile. And so if you're afraid of big drops like we've had in the past couple of days, you shouldn't be investing in speculation. You should be investing in tried and true long-term stocks that when they drop, they have a bad day, they drop 1, 2, or 3%, not 10, 20, and 30%. And that's literally what we're seeing right now, because the companies that have had that don't make money, they've been losing money hand over fist and growing up to the moon, all of a sudden the fundamentals, eventually the party has to stop. Eventually musical chairs, the music stops, and everyone is left standing on their feet, and there's chaos. That's what's happening in the market right now because of people just getting too greedy, people going after the froth of the market. And so I really encourage you, if you're going to invest in the stock market, this is a great time to invest. Don't invest in froth. Don't invest because you saw someone say that this is the next stock going to the moon because Cathie Wood invested in it with ARK Invest. That's not the time to follow the crowd. The crowd gets slaughtered, right? You want to be the one that actually is diligently finding good deals in the market, educated, making sure that you are actually buying when everyone else is selling when everyone else is buying, and everything's going up. You can just throw your money in blindly into something. When that is around, I get afraid, and right now we're seeing a correction of that mentality. Is it hard to wake up and see $50,000 just literally disappear out of your account? Yes. Even if it's $500 and you have a couple $1,000s in. Here's my hypothesis. I'm doing it at the very end because this is kind of what so many of you have been asking the past couple days. What should I be investing in the stock market? How much should I invest? In my opinion, this is what I think. You need to be comfortable, as long as you're investing the strategy that I just talked about, investing in companies you believe in for the long term, that are large blue chip companies that are super profitable and are based upon their solid growth numbers, not just speculation. If you're investing in companies like that, my kind of definition of safety is you need to be able to lose 50% of your money in those stocks and not give a care. It shouldn't affect you. It shouldn't affect definitely not putting food on the table, paying your debts, paying your employees, etc. You should not be risking that money. That money should not be in the stock market. And you should be comfortable with losing 50% of it. If you're not, you need to take money off the table. And that's just that's kind of my level of gauge of risk. And so I get very worried when people are young entrepreneurs and they have a few staff on hand, $10,000 in the bank, and they have 5 and 6 and 7,000 of that in the stock market. If that disappeared or 50% of it disappeared, would you be okay? That's kind of my acid test in terms of my risk level, my risk tolerance. Some people, hey, you might as well YOLO it if you have a couple $1,000 and you're like, I'm just going to throw it all in GameStop and see what happens. Sure, go for it. Have fun. Just realize you're not investing. You're gambling and you're just having fun. Go for it. Just throw the money in there and cross your fingers and hope nothing happens bad. But if you're investing for the long term, you got to make sure that you're okay with losing 50% of that money, and that if you got to ask yourself, if I lost 50%, if all these stocks went down 50%, would I still believe in their fundamentals enough to stick with them and know that I'll ride this out? It's very hard to find any 2 or 3 year window in the stock market where if you would have invested in index funds, invest in these type of companies, that you would have actually lost money. The problem is people get afraid and people sell out at the bottom because they're afraid they're going to keep going down, and they keep buying at the top. That's just traditionally what happens because we're humans and we follow the crowd, we follow the emotions, we follow the headlines, and that's exactly the opposite of what you should be doing right now. So if you're investing in the stock market, I would get more disciplined about which companies you are investing in. I would really, really focus on the long term. I would definitely not allow your emotions to be speaking to you. And as long as you can afford the money to be lost and you're not risking money that you need for your business or for your family, this is actually a really good time to buy because everyone else is panic selling. There's absolutely risks in the market, whether it be inflation, whether it be the interest rates going up at the Fed. All of those things are definitely an impact. Do I believe that 2021, 22 are still going to be pretty strong in the stock market overall? Yes. I feel like there's going to be pockets of high bubble territory that's going to collapse. And so I'm trying to get out of those markets, and I think that overall it's still a good place that I want to have my money in. I don't want to have it in cash right now. If inflation does happen, cash is going down very quickly. So that's my 2 cents. Just one man's opinion. It could be completely wrong. You could lose all your money if you invest in those companies I'd mentioned. But companies like Oracle, Amazon, and Facebook that I've invested over the past couple weeks, while all these other small caps have literally gone down 20, 30%, they have, if not gone up, gone down to maybe a couple percent. Those are the kind of stocks you want to have if you want to be investing, and if that money that you are investing is something you need for a nest egg, for retirement, or for just security. I'm Mike Andes. You've been listening to the Business Bootcamp podcast. Until next time, be great. Nothing else pays.